to the Future Show. Crude last week to 20.52. This weekend I filled up for, well, $2 a gallon, clearly a reflection of some of the demand concerns that we're facing.
And you must be in the city. That's expensive. It was like $1.69 out by me in the burbs here. But yeah, it's a reflection of both supply and demand, obviously, and it's probably going lower. Crude was lower this morning. I think it may be up a tick or so right now, just based on the market rally. But I've seen some estimates out there getting into the mid-teens. I don't know that we're going to get that, although I suppose the longer this goes on, anything is possible.
Scott, there's a lot of focus this morning on Congress. They failed to pass the bill last night. And, well, I guess I'm wondering, Rand Paul and 4 other senators have self-quarantined. That's got to tip the scales a little bit in terms of the balance, Democrats versus Republicans, and ultimately could be a bit of a hurdle for them to overcome in terms of efforting some of their initiatives.
Yeah, we all have to hope that they can overcome those hurdles. I mean, that's just, that's just something that is ridiculous. They need to pass this. They need to pass the right bill, but they can get there. They really need to put all partisanship aside. With the news that just came out over the last 15 minutes with the Fed giving us, I guess you could say, the ultimate Fed backstop, the ultimate Fed put. Congress needs to get together here, put aside Rand Paul and the other, Congress people that have quarantined that are not able to vote.
Yeah. Let's talk a little bit about, because it's not just here in the U.S. I mean, we're seeing a similar situation in terms of Europe. Angela Merkel, after one of the doctors was diagnosed, she's working from home. I guess we're dealing with a system that's already very taxed right now. I'm sort of wondering if we start to see more of the decision makers, lawmakers, heads of state that are now falling and becoming susceptible to this as well. Does this impact our ability to conduct necessary business?
Well, I think that what it does is it smacks everybody in the face to the reality of this now. And that any sort of contingency plans that have ever been put in place that probably have never been used before, they better dust those off and get those ready to use.
Scott, the Aussie dollar is what I wanted to talk about next. The RBA, they cut rates. I guess what I'm wondering is, when we throw the kitchen sink at this, do we lose some of the impact at some point? I mean, I guess the question is, at what point do we start to see diminishing returns? Should that be a concern, or is it just a matter of whatever it takes by any means necessary?
I think we've already started to see that, Ben, but you're right. It is right now a matter of whatever it takes. And it's unfortunate because we need to get the ship righted. We need it. The Aussie dollar needs it. New Zealand dollar needs it. Everyone needs it. However, somewhere down the road, whether it's 3 months, 6 months, 18 months, there's going to be hell to pay, excuse my language, for that. And hopefully by that time, all of these, all of these monetary decisions that have been made, hopefully we can make the best of them. But I agree, we need to deal with the systemic risk right now.
Scott, I'm sure, and you did mention briefly the dollar. I'm sure it's one of the products, products that you're keeping an eye on, if not trading actively. Can you talk to us about the bid that we saw last week? What do you think was behind it, and ultimately if you think that there's more to come?
Well, I'm a little concerned, just like Stephanie had mentioned here, that strong dollar is very concerning. However, the bid behind it is, that is the ultimate safety net. Now, we're off a little bit this morning here, but you know what? I expect us to rally. I think we can even rally to 105 here and see that maybe over, probably this week, if not the next day or two here, just based on the safetyness of, if that's a word, the safety of what our Fed is doing here, even though, we're seeing other policymakers around the world pretty much do the same.
Scott, I wanted to get your thoughts in terms of some of what we've been seeing play out recently in rates, because This is the first time, it seems like, in years that we've actually seen a strong U.S. dollar amidst rates coming off recent lower levels. Now, today I did notice on news as the indices rallied, treasuries, the futures rallied as well, so rates have pulled off some. But how closely are you watching rates? And ultimately with the 10-year, I mean, nearing its way back to that 2% level last I saw.
Very, very closely, actually. But you're right. When we saw this massive rally 20 minutes ago on the Fed announcement here, we saw the 10-year go from about 0.8 down to 0.7, and that's again a function of the ultimate Fed backstop here, the ultimate bond buying purchase program that's going on here. But it was nice to actually see that 10-year start climbing again. I think we got close to 1, if not at 1% last week, and it really needs to stabilize in that range.
Scott, one more question for you. Chicago Fed National Activity Index this morning coming in, well, better than it was last month. I think it came in at 0.16 this morning. Can we talk a little bit about what you're going to be watching in terms of economic data this week? Obviously, it's going to be somewhat overshadowed by some of the headlines across the board, but can you talk to us in terms of what you're going to be keeping an eye on? Because I saw some PMI composite numbers, some housing data, GDP and durable goods also.
Yeah, I don't know that any of that is really going to be reflective of our situation yet, Ben. So the numbers that come out this week, like you said, we're going to have to take them with a grain of salt. I think what we need to look at is especially that PMI data. Is there a big drop? Are we seeing that yet? I don't know that any negative number that we're going to see is going to surprise anybody. I don't think it should be a shock to the market that we see. But I don't think that really what the current state of the market is that we're seeing right now is going to be reflected in many of these reports that we see this week.